This is episode 2 of How Money Actually Works, Taxes Explained, Vanishing Money. Today, I'll be showing you how much money you should expect to vanish from your paycheck from taxes alone. I'm going to run you through an example of a recent college graduate named John who makes $75,000 a year, and I'm going to show you how much he has to pay in taxes. And I'll also show you how you can calculate how much you'll have to pay in taxes. Before we get started, go down, hit the like button, and subscribe if you aren't already, along with the alert bell, so you don't miss any future episodes of How Money Actually Works. Alright, so let's get to taxes. There are two main types of taxes that people with jobs have to pay, and that's income tax and FICA tax. So before we get into those two types of taxes that you're gonna have to pay, let me just quickly go over tax deductions first. Okay, so no one's entire income is ever fully taxed. Meaning with John's $75,000 salary, not all $75,000 of those dollars will actually be taxed. So there's two ways to actually calculate how much taxable income you have. And when you go to file taxes, there's actually two different ways you can deduct money from your salary to produce your taxable income. These two tax deduction methods are called the standard deduction and the itemized deduction. So let's first go over the standardized deduction. A standardized deduction is a set amount of money that the government puts out that will not be taxed from your income. So for example, in 2019, for a single filer, the standard tax deduction was $12,200, meaning that amount of money will not be taxed from your income. Okay, so let's do some quick math for John's situation in the case of a standard deduction. So if we subtract that $12,200 standard deduction from his $75,000 salary, that gets us $62,800. That amount of money is the amount of money that will actually be taxable. Now, while anyone can do a standardized deduction, you also have the option of filing your taxes using itemized deductions. Now, itemized deductions are a bit more complicated, but they could save you a lot of money in the long run. Itemized deductions are basically taking tax deductions from things such as charitable donations, your mortgage interests, and other things to lower your taxable income. Now, I won't go into detail here on itemized deductions, but just note that it can be more than the standardized deduction for some people. So definitely consult your CPA or tax professional to see which one is right for you. Alright, so now we know about deductions, we're just going to assume that John is taking his standard deduction of $12,200. Okay, let's move on to income tax. So income tax is where most of your tax dollars are going to be going towards. So there are three types of income taxes: federal income tax, state income tax, and local income tax. Now, depending on where you live, you might have to either pay all or maybe only one of these types of taxes. For example, I live in Virginia and I pay federal and state income tax, but I do not pay any sort of local or county income tax. There are states with no income tax, and there are also local cities with an income tax. So you just have to check where you live and what your situation will be. Alright, so I'm going to show you how to calculate your federal income tax, how the tax brackets work, and all of that. Now, state and local income tax basically works the same way. The rates will just be different depending on your state and city. So I'm sure you've heard of tax brackets, and how much you make actually affects how much you will be taxed. So I'm going to throw up the federal income tax bracket for 2020 up on the screen. Okay, let's take John's taxable income of $62,800 and apply it to this tax bracket. Now, a lot of people actually assume that all your money is going into one tax bracket. For example, in this case, with John's $62,800 salary, some of you would assume that all of that money is going into the 22% tax bracket, and that big lump sum of money is being taxed at 22%, but that is not the case. So here's how it actually works. We know his taxable income is $62,800. So we see this first tax bracket of 10% from $0 to $9,875 for a single or unmarried person. So the way it actually works is that the first $9,875 of John's income will be taxed at this 10% rate. Meaning from the first bracket, that $9,875 will be taxed at 10%, meaning he will pay $988 for that tax bracket. And the same thing will happen for the next bracket up. So we can see the 12% tax bracket, there will actually be $30,249 being taxed at 12%. That means for the second tax bracket, John will be paying $4,815 in taxes. Now we finally get to the third tax bracket, the 22% tax bracket, and that's where his maximum taxable income actually falls. So we need to do some math here. We take his taxable income of $62,800 and actually subtract it by that lower end for the bracket of $40,126, and that actually gives us $22,674 of taxable income in that 22% tax bracket. So that means in the third bracket, he'll be paying $4,988. So if we add together all three of those brackets and what he is paying in taxes on each of those brackets, he's actually paying $10,791 in federal income tax. Okay, so now we've calculated his federal income tax. We still need to go over state income tax and FICA taxes. So from now on, you'll see on the screen some screenshots of one of my favorite paycheck and tax calculators. I'll put a link to it in the description below if you want to follow along with your own salary. Okay, so you can see I put his salary at $75,000. He's single and I have him living in Charlotte, North Carolina. I also have it set to annually just so we can see the full year and how much he'll actually be paying in taxes for the entire year duration. Now, one other thing to mention is allowances. So you can see at the bottom there, I have ones for all his allowances. Let me just talk about that real fast. So if you've ever had a job and worked for someone, you've probably had to fill out a W-4 form, which includes your allowances. In simple terms, allowances determine how much money your employer is going to be withholding for the payment of taxes. So just to give a quick example, if you have higher amounts of allowances, that means you'll be getting more money in your paycheck, but you run the risk of having to pay the government back taxes at the end of the tax season. Whereas if you claim zero or little allowances, you'll most likely be getting a check as a tax refund at the end of the tax season. If you want me to do a detailed video on tax allowances, how they work, and how you should fill them out, let me know down below in the comments. But for the purposes of this video, I'm just gonna give John a standard allowance of 1 for each federal, state, and local taxes. So once we enter his information, we can see how much he will have to pay on his $75,000 of income for federal, state, and local taxes. So as we can see in Charlotte, North Carolina, there is not local income tax, so he's only going to be taxed by the federal government and the North Carolina state government. Now this calculator is using 2019 tax brackets because people still are using this to file their 2019 tax returns. So we can see he's being taxed $10,599 from federal income tax and $3,281 from state income tax. Now, income tax alone, he's already losing 18.5% of that $75,000 salary. Okay, now that we've gone over how much he's paying in income taxes, let's go over FICA taxes. So FICA taxes include Social Security and Medicare. You're basically paying these taxes so you can use these services and programs later when you get older. So we can see yearly he's paying $4,650 for Social Security and $1,088 for Medicare. So John's take-home money after all of these taxes paid is only $55,383 or 73.8% of his original $75,000 salary. Now, just to mention, I have not put any pre-tax deductions in here that actually lower your taxable income. Now, these things include 401k contributions and medical insurance, so I'll actually go over those things in the next couple episodes of how money actually works. So that's basically it when it comes to taxes. If you enjoyed this video and it helped you out understand taxes a bit more, give it a like and let me know down below in the comments if you have any other questions or you want me to do other topics related to taxes. Again, be sure to subscribe with that alert bell so you don't miss any other episodes of how money actually works, and be sure to share it with your friends and family. Thank you for watching and have a great day.